Hello, friends. Welcome to the Weekend Investing Daily Bite of January the 15th. A good day, I would say. We didn't really retrace anything, but at least we didn't fall. And this is the second day in the row. We are still not out of the woods, but given the kind of bloodletting that had happened in the last 8 or 9 days, any day which is flat or slightly up seems good. But we are certainly not, we cannot say today that we are out of the woods. That certainly we cannot say. But hopefully, these 2 days that we have will build on some sort of a base. And that is the best hope that you can have right now. We will discuss the perfect recipe for a disaster in your portfolios in the market in the second half of the video. The biggest mistakes some people do in their investing, and we will discuss that in the second half. Please do read the disclaimer. Do subscribe to the channel if you haven't so far. Please click on the bell notification. Now let's see where the market is headed. So what have we done in the last couple of sessions? We've been on an inside bar. So these two candles are inside this long bar that we had, the Monday fall that we had. And we are yet to really recover from this breakdown level that we had, 23,300 odd. So if we go above 23,300, we would not only cross 2 days high, we will cross the breakdown point and some more confidence will start to come back if we go there. If we don't go there and from the next couple of days we just fall down and maybe even 23,000, then of course there is really no near support that is there in the market. So market is certainly in a downtrend. The downtrend has not ended. We can hope that it may end, but we cannot be sure about it at this point. Nifty up 0.16%. It made an attempt to go above yesterday's high, failed, and stopped there. Nifty Junior slightly better than Nifty in terms of the chart, closing at 0.88%, closing above 2 days high, almost closing that gap. But Nifty Junior has also fallen the most from 78,000 to nearly 61,000. So more than 20% fall has happened here. And it is also a bit away from the moving average. We are taking a 40-day moving average. Whenever you will find that current price moves very far away from the, let's say, 50-day moving average, 40-day moving average, it will tend to bounce back or at least recover to some extent. This had made it go a bit far away from the average, and there may be a few flattish days for this to catch up and this to catch up, and then maybe we'll fall again. I don't know. But right now, this is probably looking better than the Nifty. Mid caps also have recovered all the fall from from Monday's open, more or less, still did not close this gap. We are exactly where the breakdown point was, 0.36%. So we are not too bad in terms of the chart formation here. On small caps, also an inside bar, two inside bar days, yet to recover from that breakdown point, 0.5% up on for the day. I would not complain. I would think this is okay. It always takes time for the market to find its feet again, and it is in the process of that. Bank Nifty completely flat, 0.05%. It did attempt to go up, but could not sustain there and has closed at flat position. Advanced declines are very equal today, 238 declines to 257 advances in the top 500 stocks. In the Nifty heat map, you only have Mahindra and Mahindra losing big. You had Bajaj Twins losing big. You had SBI Life, Axis Bank, and Shriram Finance, which lost some money. Kotak Bank recovered very nicely, smartly 2%, Reliance 1%. Power stocks, NTPC Power Grid zooming up 3.5 and 2.9%. Maruti doing well, Aisha doing well. You also had Tech Mahindra gain 1.7%. Coal India was up 1.5%. Trent was up 3.7%. So many stocks were seen to be recovering uh, in today's session. Nifty Next 50, as you can very well compare, much more green. Zomato on the verge of index inclusion and hence jumping up 4.4% there. DMart up 2.6%. BHEL, Motherson, then you had ICICI GI, You had Adani stocks move up again, Tata Power. So all energy stocks did very well. Power and energy stocks did very well. Some cement stocks did well. PFC, etc. all doing all right. Good day for Nifty Junior. Sectoral trends, real estate trying to make a comeback, 1.4% for the day. It has been smashed down 9.6% this week after today's gain also. Pharma, auto and FMCG taking a backseat today, -1%, -0.5%, and 0.1%. FMCG is at that cusp of a breakdown. Maybe it may go further, or maybe it is already too oversold. Pharma, private banks are and energy are the only three sectors that have not made any money in the last 12 months. Even PSU banks are now down to 3.9% for the last 12 months. Infra, public sector enterprise, IT, real estate, these were some of the sectors that were doing well today. Within the real estate space, you had Phoenix Mills, Raymond's, Mahindra Lifespace, Brigade, DLF, all these were doing well, although the chart is not particularly bullish or anything like that. It is just that it is more stable, looking more stable perhaps, or it is just waiting for the next move down. We are at some support levels on the real estate index. Now let's come to the topic of the day, the perfect recipe for disaster in the markets. So we are talking about PSU banks today. Since June 2024, Nifty is flat. We went up, we came down, but public sector banks are just going down. We have gone down 23%, even nearly 27% on public sector banks. Number of stocks of public sector banks which are above 200 DMA is zero. Now it was 25%, one-fourth of them were up till December, and now it is zero. 50 DMA, 100% stocks of public sector banks were up till 18th, 17th of December, and then they have collapsed to below to zero. This is telling you that this sector has virtually collapsed for now. There is not even a single stock which is above the 50 DMA for PSU banks. In the last 1 month, all these PSU banks have lost all this money. Whereas if we see longer returns, let's say 1-year returns, you still have several stocks that are in positive. State Bank is 23.7 on 1-year returns, 22.6 on Indian Bank. In 6 months, however, last 6 months, that has just collapsed much, much lower to 10 to 15% kind of returns. Over 3 years, the returns were very good, but you can't rely on 3-year returns to become to zero before you will take an action. So 3 years was very good, 1 year was very good, and it started to tell you that something is going wrong. 6 months completely collapsed, 3 months also absolutely nothing there, and 1 month also nothing there. So the plane is going like this for now at least. The trend that was there a few months back is no longer there. So if we see this period, July 22 to June 24, public sector banks, the CNX PSU bank index was flying versus the Nifty. And especially after, first couple of months of 2024, you had a fantastic gain there while Nifty was really not doing much. And you had all kinds of announcements of new launches coming in this beginning of this year. So January 2024, then you had February 2024, then you had sometime I think beginning of 2024 again. So a lot of activity in banking, PSU, ETFs, funds, so on and so forth. So now if we were to go a step back and see what happened before July 2022. So let's take the period of 10 years before uh, 2011 to 2023. In this entire period of 12 years, PSU bank index didn't do anything. It was absolutely flat while private banks went up 340%, Nifty went up 211%. Nobody was touching PSU banks with a barge pole also. But then suddenly things changed. PSU banks started to fly potentially from here. it got noticed. ETFs, everything was launched here in this last phase, and then there was a collapse. So the problem is lack of understanding about sectoral cyclicality, or not having that view in your mind that if we are coming into a sector, how will we eventually get out of it? Are we going to get out of it? That is the first question. Are you, if you are investing in a sector, are you thinking of it from a sectoral point of view or from an individual stock point of view? Either way, what is your exit strategy? You can't be, getting into a sector or a stock without an exit strategy. That is the core sort of mistake anybody could do. You need to have some framework basis which you will enter and some framework basis which you will exit. There cannot be a situation where you will say, okay, I've put my money into this and now I will, see whatever happens, happens. So this is the last 18 years of PSU banks versus CNX 500 index. You can see there are years where PSU banks do better than the wider index. Then there are years where PSU banks don't do better than the index. There are years where you get huge outperformance, 68%. Then there are years where you have negative underperformance or underperformance minus 48%. So sectors will keep going back and forth, so on and so forth. So there will be periods of low interest in any particular sector for long periods, like here, or there could be short, sharp periods of high interest. So as of end of 2024, if you were to tabulate all the funds in the market, you will notice something which is very, very unique, is that 41% of funds are sectoral or thematic in nature. So every time a theme becomes hot, a fund is created, a ETF is created, a specialized focus fund is created, because that is the FOMO at that point, and it is sold to the people. And why it is successful in selling? Number one, because they are able to show, see past 3 months performance, see past 6 months performance, see 1 year performance. Nobody is showing you 5 year performance. So you are looking at last few months, few quarters of performance, and the fact remains that you are basically, you know, succumbing to your FOMO. And on top of that, all these thematic and sectoral concentrated funds are also paid hugely by the producers in uh, giving incentives to the distributor. So these funds have more incentive than selling a large cap vanilla fund or a mid cap fund. Nobody wants to sell that because there the commissions are much lower. Here the commissions are very high, and this is the like the fast moving funds of the entire market. So this is the problem, that the incentives of the people who are bringing this in are not aligned with the incentives with of the buyer. And whenever that will happen in the financial markets, there will be a clash, and eventually the producers and the distributors will make money. You may make money if you are lucky in the short term, or you keep waiting for the long term for those themes or sectors to play out. So don't fall into this trap. This is the perfect trap for retail, to give into recency bias, to give into greed, to give into not being aware of, even if you are getting into a sector, how to get out of it, when to get out of it, and basically the risk associated with uh, looking at one sector. There are many people who will just invest in one or two sectors and not really diversify across sectors also. So this is a big issue in the market. What has been your experience with sectoral based themes? How do you handle your portfolio investments if you are investing in funds, or in case you are investing in momentum, etc.? Then sectors automatically keep getting rejected and accepted. So at least that part of the framework is sorted in those situations. So this is where the message was for this video. Do let me know in the comments. I'm trying to engage and answer each and every question that you raise in the comments. Incidentally, we are also going to record this in Hindi from today. So if you want to listen to this in Hindi, I will be making an attempt on that as well. Thank you so much for watching. Do like and share these videos and subscribe to the channel. Thanks. Bye.